Our market guest tonight says investors should buy this dip. He's optimistic about stocks and not worried about the recent sell-off. Sandy Villery is portfolio manager of his own firm, Villery and Company. It is based in New Orleans. So, Sandy, let the good times roll.
I think that's exactly right. I think the market's going to be up about 6% this year. But I think stock picking is going to rule the day. We got to find those diamonds in the rough, those gems that can outperform and deliver good returns for our shareholders.
So, go ahead, Susan.
All right. So, you're saying buy the dips. Right now, so many investors are looking at the same information you are. They're worried about what's going to happen with interest rates. They're worried about all of this volatility. And so they're just playing it safe. And you're just jumping in and buying what you say are, really beaten down stocks. So what are you seeing that they're not seeing? Why are you so optimistic?
Yeah, I think you really do have to look at individual stocks, and that's the key word. So while a lot of stuff is going on, you've got all sorts of issues all over the planet. I think it's time to really just take a look at, be laser focused on individual stories. And while earnings were, GE had good numbers and Goldman had good numbers, tough numbers out of IBM and Google. Let's focus on, individual stocks. That's what I'm focused on. Good
numbers in terms of beating the forecast, but not necessarily good numbers in terms of growing profits. Both of their profits were actually lower than a year ago. But I take your point, and I want to move to your first stock pick this week, and that is like-in-kind quality, ticker LKQ. Tell me about this one and why you like it.
Yeah, so these guys distribute refurbished and recycled auto parts, basically that are exactly like OEM or new parts, but about 20 to 50% of the cost. So if you think about it, body shops are really funded by insurance companies, and insurance companies want to get that car back on the road as quickly as possible for the cheapest price as possible. So we really like it. They really consider themselves a logistics company that happens to be in the auto parts business because they get these parts to their customers so quickly. Rob Wagman, the CEO, just invested another $318,000 into the company, and it's down about 17% year to date, which kind of creates this opportunity because as winter was so bad, a lot of body shop owners couldn't get into work and couldn't order those parts. And so that's just deferred for the next quarter. I think there's going to be a lot of pent-up demand and a great opportunity to buy a 22% grower at just a 20 multiple.
Okay, really interesting. And then the other one that you have on your list, Flowers Food, the ticker symbol there, FLO. It's the second largest bakery in the country. Tell us more about this company.
So I like this because it's boring, right? I mean, these guys were, they were founded in 1919 in Thomasville, Georgia, and now went public in 1968. But the second largest bread bakery in the country. They've got the largest bread brand in the country in Nature's Own. They were doing about $343 million in revenue about a decade ago, and now they're doing over $1.1 billion. So the nice thing is that it's a restructuring play right now because they just bought the Hostess bread assets out of bankruptcy. So now they have the 5 bread brands, including Wonder Bread. They've also got about 20 different bakeries and 36 different warehouse depots. So they're selling off about 9 bakeries. They're selling off 21 different warehouse depots. And so while margins dragged in the second half of 2013, we're going to start to see recovery in the back half of 14, and you collect a nice dividend yield. These guys have returned about $750 million in free cash flow over the last 5 years, and I think it's going to be a real big winner.
Let's move you on to the last one. We've got auto parts, we've got bread. Bore me one more time, Sandy. Come on, baby.
All right, we can certainly do that. Pool. It's the largest distributor of swimming pool products, not only for construction, but also repair and maintenance for your swimming pool. So these guys are as big as their top 50 competitors combined. I love companies that dominate a niche, and this is truly what they do. If you believe people are just going to put chemicals into their swimming pool and not let it turn green or black or fill it in, then pool's going to be a good play. Not only that, there's a deferred maintenance part of this story where there's 2 million pools in the U.S. that are between 6 and 15 years in age. And as your pool hits that magical 8-year, you're going to need to replaster it or it's going to crack and all this other stuff. They reported earnings today. They reiterated their guidance for 2014. They bought back about 484,000 shares in the quarter. And it's one that I think is going to work well as they can grow at 20%. I like it a lot.
Well, you know your boring stocks well, Sandy. Do you own any of these? Give me a little disclosure here.
I own them all. My firm owns them all just in New Orleans. So I just say we eat our own cooking, and that's what I certainly do in this situation.
Money where your mouth is. Sandy Villery, have a great weekend.
Thank you. You too. Take care, Tyler.